President Uhuru Kenyatta has rejected the Finance Bill 2019, demanding that lawmakers remove a cap on commercial lending rates. In a memo to Parliament, President Kenyatta said that the law has caused unintended effects that are significant and damaging to the economy, and in particular, the micro, small and medium enterprises, which are hardest hit. Here's Chimtai Goin.
The President's memo to Parliament now sets the Executive and the August House on a collision course
by repealing Section 33B so as to remove capping of interest rates chargeable on loans.
A section of members vowing to rally their colleagues to overturn the President's decision. The memorandum now handed over to the Finance Committee, which is expected to finalize its report for the House to debate and vote within 21 days.
As the committee discussed, they need to find a transitional clause that at when will it take into effect.
In considering the reservation, the committee is expected to additionally apply itself to the question of the commencement date of the provision and the effect of the proposed amendment with regard to existing loan contracts between lenders, that is, banks and other financial institutions, and borrowers.
To overturn the President's position, 2/3 of members of the House must be present and vote against it. In his defense, the President insists the interest rate cap effected in 2016 had hurt the economy. According to the CBK, the edging out of micro, small and medium enterprises from the credit market lowered the country's economic growth by 0.4% in 2017 and a further 0.2% in 2018. Some members of Parliament, however, claimed the economy had been battered by the government's move to borrow from local banks. President Kenyatta argues that a removal of the interest rate cap would resuscitate the choking micro, small and medium enterprises and rescue unsuspecting Kenyans from the jaws of Shylocks and unregulated lenders. In his words, the President says most commercial banks adjusted their lending business models towards large corporates in the public sector and away from small-scale borrowers and individuals who are perceived to be high risk. Banks have also been accused of ignoring the Central Bank of Kenya directives on interest rates, and there are concerns that if the cap is removed, banks will have the freedom of pricing their loans, thereby hurting Kenyans.
The committee ought to table its report soonest to allow the House to consider the President's reservations within the same timeline.
It remains to be seen if members of Parliament will marshal the 233 2/3 majority within the next 2 weeks to assert their voice. Chimtai Goin, Citizen TV.